Okay, so today we're going to talk about a few different things, and this is, basically for beginners or even if you've been around for a while. But one of the things that we're going to talk about is trend and how I look at it. We're going to look at basically the patterns of the charts and also the moving averages. We're also going to talk about the highest probability setups, the matchup of time frames. We're also going to talk about my trading plan is different slightly, okay, because I want higher probability setups only. We're going to talk about some triggers for people who still don't quite get triggers. And if we have time at the end, we'll take a quick peek at the two-step pattern, okay? So let's just get rid of this. Well, here, I'll put it over here to remind me. But one of the other things that I want to talk about is, basically these guidelines, okay? Now I've posted them on the site again, and what I've done here is add one more thing today. Okay, so you have, basically the welcome to the service, the guidelines to using the work, the suggested day trading plan and suggested swing trading plan, and then also a little bit about the highest probability setups. But what I did add today is basically what I use out of all this. So as far as my personal trading plan, it's going to be slightly different than what you're seeing here because it's not going to include all of the setups, but it is going to include the highest probability setups. Okay, so bottom line, I still use, the same types of triggers as far as the crossovers and all that kind of good stuff, but I will not allow myself to take a trade overnight unless at least the 513 EMA combo on the daily chart is in agreement with my trade. Okay, so for a buy, daily 513 EMA needs to be bullish with the 5 EMA above the 13. More ideally, I'd like to see all the moving averages on the right side of the daily chart, and we have some really good examples of that. I'm actually going to have to go and open up all my charts for that. And then you just kind of reverse that for a short, it would be opposite. Now for my day trade decisions, it's more ideal if they are in agreement with what the daily chart is saying, at least with the 513, but that's not an official rule for my day trade stuff. But I do need at least 2 time frames to match up. So for example, if we have a bullish setup on the 120-minute chart and the 10-minute chart is also bullish, then I can be a buyer for a day trade, okay? And then reverse that for a short. This basically keeps me out of counter trend trades overnight, and I think that's where you can get really hurt. Okay, even though there might be a setup, if it's counter trend, kind of like the Apple trade recently, you have to be super careful. Okay, so let's get rid of this, but this is available to everybody, and I also did post it on the site again. And then what we want to do is let's open up my charts because we have a lot of good examples to go over using, what we currently look at on the end of day video. So let me just go grab those. All right, so look at workspace 1 to start with. Yes, I did hit the recording, thank you, because there definitely are times where I forget to. But I will post this probably on YouTube and on the site. All right, so let's first talk about the trend and how you determine the trend. Okay, for me, there's 2 different ways that I determine the trend. Okay, one of them is what is the pattern? Is the pattern higher highs and higher lows, which is bullish? Or is it lower lows and lower highs, which would be bearish? Okay, so that's one of the things that I look at. Now, if the market is kind of sideways, then it's not really helpful. I mean, I could still set up trades in a sideways market using the fib work, but it's not really helpful as far as the trend is concerned. So that's one of the first things that we want to look at. So if you have a chart where you have a nice pattern of higher highs and higher lows, then the next thing we look at would be the moving averages. So the moving averages on the daily charts are different than the ones that I use on the intraday charts. For a daily chart, what we do is we look at, actually, let's see, do I have all the bars on here? Yeah, I have them all here on S&P futures. So on the daily chart, I'm always using a 200 simple moving average, that's the one in pink. I'm using a 50 simple moving average, that's the one in green. And then I'm using the 513 EMA combo, okay? And with this one, for example, if the 5 is above the 13, that's considered to be bullish. If the 5 is below the 13, that's considered to be bearish. So it's most ideal if you're looking at a chart and you're going to have the highest probability setups, if you not only have a bullish pattern of higher highs and higher lows, along with all the averages being on the right side. And we're not always going to have that, but we do often enough. And those are the ones that, you know, will be the highest probability. So as far as everything being on the right side for the buy, for example, we're above the 200 simple in this S&P futures daily chart. You're above the 50 simple, and the 5 EMA, or here, the blue one, is above the 13 EMA. So all the moving averages are on the side of the bulls, and you have a bullish chart. So at this point, you know, the trend is to buy the pullbacks. We want to focus on the buy side when the market's like this. Also, the reason why I use the 513 is because, not because it's 100%, because it's not. But if you look at a particular chart, you have to see if it works for that chart, and it does work very well in the indexes. If you see here, actually I can take off the other indicators. So let's see, I'm going to take off the these two. Okay, so now you just have the 513 on the chart. But if you're trading on the side of the 513, note that it crossed here to the upside, only had like a one-day cross to the downside, so one head fake, crossed back to the upside, and this whole time it's been correct to set up the pullbacks and focus on the pullbacks for new buy entries. Okay, now this is what I mean about, you know, the highest probability setups. When you have all of these on the daily chart on the same side, then you want to focus on that side. And obviously you just reverse it for the sell side. We'll have an example of that also. But let me get that other chart set up open and on the side. So that will be my second workspace. All right, so I'll have those charts getting ready on the other side. So to me, when you have a pullback on a chart like this, where all the averages are on the side of the bulls, I call that a royal setup, okay? Because everything is on the right side for a buy, okay, when it's this way. Now, obviously, if you're below the 200, below the 50, and the 5 and 13 are in a sell mode, then we'd be looking to sell the pullbacks, okay? So that's really key. Now, the other thing, though, that you'd want to see if you're taking a trade is you also want the lower time frame chart to be in agreement, okay? And on all the intraday charts, I'm pretty much using the 834 EMA combo, okay? And that's what we're using for triggers. Now, I've written it up that if you want to be more aggressive and you want to use a 513 EMA crossover, you can. But I'm generally talking about, you know, the 30-minute chart with the 834 EMA crossover. Now, note that we had beautiful support here on this daily chart. It had, you know, pretty much a symmetrical pullback. It hit and held, and then it triggered on a 30-minute chart over here. So once this 30-minute chart triggered, it was then in agreement with the daily chart, okay? And that's when I like, you know, taking my triggers and keeping it overnight. And if you get the full move off of something, you know, typically we're looking for the 1272 extension target, okay? So the highest probability setups are going to be where you have agreement not only on the daily chart, but on the intraday chart, you know, and sometimes you have to wait for the trigger. And there's going to be other times, though, where it's not in agreement. Can you still take a trade? You can, but it's not going to be as high a probability setup, okay? So S&P is a really good example of, you know, where we had all the moving averages on the right side. IWM is another. Okay, so here, the IWM, we had price above the 200 simple, above the 50 simple. The 5 and 13, we're in a buy mode with the 5 above the 13, actually 5 above the 13 here, where we're at currently. Okay, now I don't really have an official setup here on this daily chart, but in this case we did, because we had the inclusion of symmetry here. So you did have a setup on this time frame chart, and you did have the crossover to the upside. So once we had the crossover, and you also took out a prior swing high, that tells you that it's okay to take a trade and then place your stop initially either under this low or underneath the low end of the zone. Okay, so that's another example of having all of the averages together, not only on the daily chart, but when we also crossed to be in agreement on the 30-minute chart. Okay, so that's a good example. You know, same thing in, you know, the NASDAQ. Okay, so we also had some beautiful symmetry here. We had price above the 200, above the 50, the 5 and 13 crossed back to the buy side here. It was in the buy side here when it tested the support. So we had a symmetrical pullback. This was considered to be a royal setup. And then once it triggered on a 15 or a 30-minute chart, the 15 would be the more aggressive swing trade trigger. You know, what we're doing is we're going to risk underneath here, and we're looking at a potential target here. First target, 188.41. So when we look at some of these other charts, you should also understand why I was not so happy with Apple. Okay, why? Well, first look at the pattern. The pattern was bearish. Lower lows and lower highs. Okay? Price was below the 200 simple moving average. Price was below the 50 simple moving average. And the 513, the 5 was below the 13. So was this a great buy? No, it's absolutely counter trend. Now, did we have a reason to consider a counter trend buy? Yes, we did. But was this considered high probability? No. Why? Because everything else was working against you. It doesn't mean that you couldn't make some money off of this. And it doesn't mean that this can't be a more important low eventually. We're still above it. But the odds are not with you like they are when you have everything on the right side. Okay? So in this case, selling a pullback when all the averages were bearish and the pattern's bearish was a royal sell setup. And the potential on the downside goes to the 1272 extension. Okay? So here, okay, so here you know that we had all the moving averages on the side of the bears on the daily chart. If you go down to the 30-minute chart, well, guess what? When this crossed to the downside and took out a prior swing low, then this became in agreement with the sell setup on the daily chart, which means that the idea that we could extend to the downside is higher probability than us holding above here and taking off. Okay, it doesn't mean that this can't hold. It's just saying that the odds are better for the short because of where you're at with the moving averages. Okay, now I'd say a good example of, you know, going the wrong way would be here on Tesla. If you look at this 30-minute chart in Tesla, the 30-minute chart is in a sell mode, okay, because the 8 is below the 34. Remember, I use the 834 on all the intraday charts, unless you're, you know, setting up a more aggressive trigger, which would be a 513. So in this case, that's why, you know, since it's general pattern of lower lows, you know, that the better side was to look at the sell side, you know, to sell a pullback within a downtrend where it would typically extend to the downside, rather than looking at a buy against support. Okay, because if you're buying against support in a downtrend, you're swimming upstream. But if you're going to look to set up the sell side again, then, you know, that's in the direction of the trend to look for a possible short. If we, you know, can set up some resistance that's tested and that holds and that triggers an entry for you. You know that there was an entry against this resistance. You know, if you went down to the lower time frame chart, but you can also even see the crossover right here. Okay, so Tesla is a great example of one that's going to be a better short. Not at the lows, but if we get a bounce, we want to set up the sell side again. Okay, we're in a place where I have some timing for a possible bounce, but rather than using the timing for a bounce to try and pick up a few pennies here, I'd rather, you know, let it give us a rally, get into some new resistance, and give us a new sell trigger, and stay within the direction of the trend. Does that make sense? Anybody who's listening at this point? I hope this, yeah, this should be recording fine. All right, let's see. What else do we need to go over? I know that there are, oh, let's do one more example of a chart here. So we're looking at a gold chart. This is the April contract. And price is currently above the 200, above the 50, and the 5 and 13 is in a buy mode. So is it better to buy or sell in this one on the daily chart? I mean, I'm just going to answer it for you, but I mean, I would prefer looking at the buy side, buying the pullback, because all of the averages support the buy side, and it's, you know, it's a little hard to see, but it's a pattern of higher highs and higher lows. So if we hold this support, then it's more likely to head here. Now, if you're trying a short up here, when all of the averages are bullish, that's absolutely counter trend. I'm not saying that it won't give you any money, and if you're super nimble, you know, maybe it's going to work for you, but the odds are not with you. And you want all the odds that are possible to be on your side to be on your side. Okay, so that is definitely something to remember. Now, did we see a buy trigger? We actually did. So, you know, 15-minute chart trigger would have come sooner, but you did see crossover to the upside, took out a prior swing high. Nice rally so far. Now, I can't guarantee that we're going to get the target, but that's what we always shoot for. Okay, so this is what I mean about, you know, the moving averages and having things in sync. What about crude oil? Okay, well, right now, crude oil is above the 200, above the 50, 5 and 13 is in a buy mode. So I'm going to still look at pullbacks because I think there's a potential in crude to go to the 1272 extension. Now, is the 30-minute chart in agreement yet? Yeah, it is. Okay, had the crossover here, took out a prior swing high here, had a really nice rally. Okay, so that's what I mean by staying on the right side. Now, I want to show you maybe two more charts before we look at, you know, some triggers, and then we can also do a quick discussion on the two-step patterns. Okay, so here's an example where we have mixed parameters. Now, in Google, I mean, it's slight, but the 5 just crossed back above the 13, and you're above the 200, yet you're below the 50. So when there's mixed parameters, you can make a case for either side, but it's not going to be as high probability because, you know, you can easily make a case for either side. It's not like you have everything on the right side. So I'm not saying that this is not a setup or this is not a setup. It is. It's just not going to be as high probability as it could be. So that's what I want you to look at when you're looking at these charts. I want you to look at the patterns, and then I want you to look at you know, where we're at relative to the averages. And here it can get a little bit confusing also, even, you know, because of this. Why? Well, the larger pattern is still down, right? But within the context of this larger pattern, you just took out a prior swing high. So again, you can make a case for either side. So that's why I'm not personally focused on Google, because there are better setups than Google, the ones that have everything on the same side. NVIDIA is, or has been, such a great example, because look at this with the 513, with price above the 50, price above the 200. Have you heard me call out one short in NVIDIA on the end of day update? Hell no. Okay? And there's a reason why. I've just basically explained it, the reason why. Now, there's one other thing. So a setup's a setup as long as you have either 3 levels for a price cluster setup, as long as you have a 2-step pattern with a cluster, or as long as you have a symmetry setup. Those are all setups, but the question is it a high probability setup or not? Okay, and that's where you have to take the extra time to judge the pattern and also where we're at with the moving averages. So for example, I got asked today about, was there a two-step pattern in Apple? Well, there would have been. Let's see, I would have to add this low to high. So yeah, this would have been, a 2-step pattern that included the 1272 symmetry projection and a 618 retracement. And if it held this area, the potential would be to the 1272 of the full zigzag, whatever that would be. So let's see, this high to this is the low that's held. So the potential would be here. But was this a high probability setup? Well, first of all, go look at the daily chart. Hell no. The daily chart is bearish. So that's working against you. What about the 30-minute chart? Well, the 30-minute chart had the moving average cross over to the downside and took out a prior swing low. So is this a high probability setup? No. But was it a 2-step pattern? Yes. Could it still work anyway? Yes. But you just don't have the higher probabilities on your side. Okay? I hope this is making sense. Next thing, let's go over triggers, and again, the trigger that you use depends on whether you're looking at a swing trade or let's get the NASDAQ, a swing trade or a day trade. Because for a day trade, you can use, you could have used a 1-minute chart trigger against this support and you would have gotten in pretty quickly. You could have used a 5-minute chart, okay? But if you wanted to keep it overnight, I typically want you to use a 15 or, let's do NQ, or a 30-minute chart trigger before getting involved. Okay, so that price, that was like 181.40 area. Wait a second. This is NASDAQ. Okay, and this would have been 81.14. Let me get the dates. Here, I've got to label the dates real quick. So this was March 11th. So we're looking for March 11th. Where the heck is it? Okay, March 6th, March 7th. Okay, here's, okay, March 11th. Okay, here. So we're going to look at this data. So here on a 15-minute chart, once you had the moving average crossover and you also took out a prior swing high, that was your buy signal. You could take a buy and define your risk underneath this low or underneath the low end of the zone here. Okay? Now, if you use the not so aggressive trigger, let's see where that came in. Again, we're still looking for March 11th. This is, okay, March 11th. Okay, is that right here? Yep, so here, held the zone, had the moving average crossover to the upside, took out a prior swing high. Okay, then you, again, were allowed to take an entry. And if you don't, if you're worried about you know, something being too risky, then look at an options strategy. Buy a call spread, or just buy a call. I mean, calls would tend to be expensive, so, but you can do a spread, and then you know exactly what your risk is if it's too far away from, you know, your definition of risk. So the triggers, again, depends on, you know, what time frame you're looking at. Let me see if I would have a good example from today. Do we have anything? Well, actually, we can look at this. This is IWM on a 30-minute chart. And we know the daily chart's bullish. So we have at least 2 time frames that are bullish. So where's a trade, a day trade decision off of that low? Okay, so this is a, I wanted a 1-minute chart. So that was at like 204.71. Well, this one, it doesn't look like it would have triggered until like right near the close. Okay, because here's the moving average crossover on a 1-minute chart, and you took out a prior swing high. Now, in this case, you could use that 1-minute trigger, and you can keep it overnight. Why? Because the 834 is already in a buy mode. Okay, so that's another thing to do. There's one more little secret if you want to sneak into a swing trade, but not want to wait until it's really made a huge move before getting in, is that you can sneak in with a 5-minute chart, wait for a 5-minute chart trigger, but then only keep the trade overnight also if the averages are in the right place. Okay? So, yeah. Okay, question. So for futures, if we use the 1-minute or 5-minute, should you use the 513 or the 834? I've actually used, for futures, those are probably the only ones where I'll use tick charts. A 377 tick chart with either the 834 EMA or the 513. Again, your choice. I think on mine it's actually the 513, just a little bit more aggressive, because I know where my definition of risk is. And then also what I like to see is, like let's say if you want to use the 834 on a 377 tick, but you don't have tick charts, one that would be similar would be to use a 1-minute chart with the 513 EMA crossover. That would be similar to a 377 tick with an 834 crossover. I mean, you can kind of check that for yourself. I haven't checked that much recently, but that's something that you can use, you know, for a day trade decision. Yeah, there were times where I used the 2-hour charts, but that's going to be like here. I mean, when you have something like this, when we have time and price coming together, like it did on the 11th, okay, you can absolutely use those setups. You know why? Because the risk might be under here, but the potential reward, so the risk from, you know, maybe here to here is not big compared to the potential reward, which is, you know, up to here. But yeah, you can absolutely use 120-minute charts for setups. I mean, we can only do so many charts for you guys. I mean, but there's, you know, I'll never run out of charts or chart setups. You know, as long as you're willing to look at some lower time frame charts, you're always going to find a setup. But that's, you know, again, people get confused on the triggers. You know, here, so here with the IWM, we had, let's see, again, well, we had the other support, you know, that shows up on the lower time frame chart. But let's say that that's the setup low. Where's your trigger? Well, it triggered here. Well, here is the crossover, and then it didn't really take out a prior swing high till here. Maybe it looks different on the 15-minute chart, but you know, that would be your trigger. against that, the low on the daily chart in IWM. And I'm pretty sure I have a lot of videos on YouTube that go over, you know, the triggers. And do not forget, you have all of that information in this plan here. And again, the only thing that, you know, you have to decide for yourself is, you know, are you going to do the higher probability setups or what? But all the information is here, you know, the 3 official trade setups, the formula for success, which is trade setup plus trigger equals entry, and then you manage it. Okay. This is where I tell you about the moving averages. Here's the day trading plan. Here's the swing trading plan. Okay. Now there's, you know, some nuances that can be explained, but when we have more people, you know, maybe we'll go over some of those questions. All right, hang on one second. Yeah, but you have all your information there. And then it's just, how are you going to fine tune it? And I told you what I do, you know, because I have to refine mine, you know, even further. Because I didn't have a whole lot of time to do stuff for myself when I was full-time with you guys, but now I do. So that's what I'm going to focus on to start with. Okay, I'm not sure that I understand that question. If it's coming off a much awaited bottom. I mean, it's first going to cross over on the lowest time frame charts. Yeah, I don't fully understand that, so I'm not going to try and figure that out right now, but you can ask me, try and clarify that, and I can see if I can answer that for you. The only other thing I wanted to go over today was the two-step patterns. And again, you know, these are just the basics. Okay, but this is what a two-step pattern is going to look like. Some people just think a zigzag is a two-step pattern. It's not. It has to be correcting a prior trend swing. So this is a two-step pattern buy, and it has to have specific price ratios that show up. And if it holds, then we look for the 1272 extension. Versus a two-step pattern sell, it can't just be this zigzag, okay, with price relationships. It has to be correcting, you know, a trend setup. And then the potential downside would be to the 1272. So a two-step into supports, a two-step pattern buy, a two-step into resistance is a two-step pattern sell. Then, in the case of Apple today, all the averages were on the wrong side. Was it still a two-step? Yes. But was it a good setup to consider? Not as good as one that has all the averages on the right side. So that's something you have to remember. And then the last part about the two-step, you know, is pretty much this. You know, it's a two-step zigzag corrective pattern with very specific ratios that need to come together. Okay, the first swing of the zigzag needs to be similar or equal to the second. Okay, that's where we use the 100% projection. Then the middle part of the zigzag needs to give us a 1272, a 1618, or a 2618 that overlaps near that 100%. And then the third part of it is that you need a retracement of one of the prior swings that also overlaps where the other two levels overlap. Okay, so, you know, it's very specific. It's also going to be a cluster. It'll be 3 price relationships, but it's very specific in what price relationships have to show up and come together. So that's how a two-step pattern is different. But don't get caught thinking that just because you see a zigzag means it's a two-step pattern, because it's not. It could be part of a bigger one, but it's not. So that's pretty much all I have for today. I just wanted people to understand how I'm looking at the averages, you know, for the best setups. And I try and discuss that every single day when I go over, you know, these charts. I'm at least going over most of the averages with that. But, I think after I repeat it over and over and over again, you get the basic idea of what I'm trying to tell you, and also express, that, which setup is better than the other. So, are there any other questions? Oh yeah, the question is, if I waited for a daily to cross over, yeah, I don't wait for the daily to cross over for a trigger. We use the lower time frame chart. For example, I use, this daily chart here, this setup with a 30-minute trigger. I'm not going to wait for, well, first of all, this is already crossed over to the upside. I want to go to the lower time frame chart. The setup is on the higher time frame. The trigger is on the lower time frame chart. And actually, I'll go ahead and put those other moving averages back on this particular chart. What do you mean the third aspect? The retracement part of that? Remember, you want 100%, this is the zigzag. You want 100% of the first swing down compared to the second swing. You want that to also be near or overlap either a 1272 of the low to high swing in the middle. So 1272 came in here, or a 1618 or a 2618, but only the 1272 came in here. And then you want, then you have, the initial swing that it's correcting, which is this swing. But you can use this swing or any of these other swings to find a retracement that overlaps. In this case, it's a 618 retracement that overlaps the 100%, that overlaps the 1272. And I'm not sure I have any other two steps around on these charts to show you. But I know that we had that one on the daily. This one, no, I don't think that quite did it. This one might have fit, because you had a 1272. We went a little bit through the 100% in Amazon. Okay, but there's a 100%, a 1272, and a 618 of the prior swing. Two-step pattern. Now this would have been a better two-step. Why? Because all the averages were on the side of the bulls. So that's what we're talking about. No, it doesn't have to be a 618 retracement. It just has to be a retracement. It could be a 382, a 236, a 50%, 786, 618, but one of those. It's not as specific as, it's got to be a 1272, 1618, or 2618. For the retracement, it could be any retracement of a prior swing. All right, so that's all I have for today. I'm going to go ahead and stop the video, and then I will post it on both YouTube and then also on the site.